There you go, nailed it. That is cool that the button works.
I want the price to earnings to be lower than 15. The market value is usually between 20 to 25 times earnings. Some say it's 15 to 25, but find good value, PE ratio less than 15 is usually what you want to look for. You can obviously find a higher PE ratio, and that's actually an indicator that higher growth is being anticipated. Next indicator would be PEG. You want this one to be less than 1 point, we'll say 2.5.
So what's that one? What's PEG stand for?
Price to earnings.
To growth.
Price to earnings growth.
But in general, people use PEG ratio less than 1.
Well, okay, so now that's in the most perfect world ever, but that is rare. Like here, let's look for under 1. You're not going to find a big, a large amount of stocks underneath 1 PEG. Where's PEG up here?
What's PEG ratio? What's PEG ratio?
PEG is
PE ratio divided by annual earnings per share growth.
Yeah.
So
So you got it. PEG ratio over the growth rate.
earnings is the growth of the company too. So like how the earning correlates with the growth of the company.
the price of the stock.
Yeah, the price of stock. Well, that's the earning. That's
The PEG ratio greater than 1, it usually is an indicator that the stock is currently overvalued. This could be because of high demand and stock market driving up the price. So a PEG ratio less than 1 would also be an undervalued stock. We're using 1.25. It's just to try and find stocks that are in a relatively lower.
like we'll find strong ones. What was a really strong one? I found a really strong one during our analyzing class that had like a 1.1. And yes, you like under 1, but it was still going to be a gainer. Like they can still, going back, we'll make this point over and over again. Stocks will act erratically and for unknown reasons. So despite of knowing all these statistics, they will still go in other directions of what you expect from analyzing the numbers. All right, so
Where's the PEG ratio? Here.
PEGs right here. See, so if I scroll over it, we got price to earnings to growth, a ratio used to determine a stock's value while taking into account earnings growth. So it's under 1.
And then so it's under 1.
Yeah, and then we have PE over here.
Our next indicator would be price to sales, and this is the price of the stock over the revenues of the company it sells. We'll say we want that to be less than 1.
So PEG ratio less than 1.25 is not enough to find the undervalued stock by itself. So you need a combination of the ratios.
So now, okay, under 1
Now, PEG
is
ratio
a good point of PEG, but at the same time, like you're saying, you could do it isn't enough. I'd recommend to find new stocks doing under 2, and if it's over 1, you go and check the intrinsic value, which we'll talk about later. That will look almost more of a fundamental of PEG. Like you're still going to look at the price they're offering and look at how they're going to grow over past years, and then you're going to find out yourself the number that you think it's going to be worth. So you'll be able to see if it's undervalued or overvalued. We'll go back to that. So yeah, so maybe for finding new stocks, you do under 2, and then you make sure yourself that they're undervalued rather than go off the PEG.
What's PS? What's that S in sales?
Sales, yes.
Sales per share?
Per share, or no, sales of the company.
Price to
So
sales ratio.
it'd be the
Here, it's the what?
P is price, right? Price per share.
Reflects the value placed on sales by the market. It is calculated by dividing the current closing price, so the price of the stock, by the dollar sales value per share.
Per share, yeah, it was less than 1.
Yeah.
This is what else?
All right, so
next indicator we use will be the price to free cash flow. We'll want that to be less than 10.
where's that one?
Free cash flow.
Yes. Might be under cash flow.
Yeah, where's free cash flow? Yeah, there we go.
So this will be the stock price over the operating cash flow per share. price to book ratio. We'll want that to be less than 1.5.
What's the difference between price and the book? The PB, what's B stands for?
Book value.
Price to book, so it'd be total assets minus intangible assets and liabilities.
Yeah, and then over the total shares.
So low price to book ratio can mean that the stock is undervalued. It could also mean that there's something fundamentally wrong with the company. So you have to pay attention to other indicators that are going on with the company at the time.
Welcome, Rob. Come sit down.
Who else is in your class, of that class, or nobody?
Our
else?
finance
Yeah,
class.
32?
Or Jessica was in there.
I don't know.
Among us.
Jessica, yeah, Jessica was in our class.
That's it.
Where's Jessica?
And we have a debt to equity ratio, which we want to be less than 1.
D less than 1. Why we need to add DE less than 1?
DE,
Yeah,
debt to equity.
yeah.
You want to make sure, this is kind of going back. I don't know if any of you guys took an accounting class. Anyone? Raise your hand, maybe. Accounting class? Yeah, well, you can take an income statement or a balance sheet and basically identify if the company is in over their head. Like if they have way too much debt for the amount of equity or amount of, I guess, assets in a sense, to outweigh the debt and equity. So this is a ratio to see if they're about to flop or if they're in a good standing point, if they're already borrowing a lot of money or whatnot. And so if you get a flag on this one, I'd do more in-depth research into why they're in this situation.
Total, it's debt to equity is total liabilities over shareholders' equity. Our next will be the return on equity. So that will be to show how profitable a company is when compared to shareholders' equity, how they can take the money that they've borrowed and turn it into profit. Obviously, the higher the number, the better. Show high growth.
Return on equity.
Anything else?
We have a couple more.
We have a bunch more. Don't you worry.
Return on assets, you want to have
Not under.
greater than 5%. It's very similar to return on equity. It's a profitability indicator. This one's on the assets of the company. We have profit margin greater than 2%. That's kind of,
That's low, right?
it is. Obviously,
Got specific or criteria.
payout ratio. Payout ratio, you want to have it less than 50%.
Where's
What's this
PM?
payout ratio mean?
It is, hold on one second.
Anybody know what this payout ratio means?
Where's PM, dude? Where?
It's a proportion of earnings paid out as dividends to shareholders. So you don't really want it over 50% because it can show that they're paying the shareholders more than they probably can handle. So you want actually to be less than 50% because they're not trying to overcompensate their shareholders, so to speak.
In a perfect world, you'd want the highest, but like he says, it's not doable.
And then we have a enterprise multiple, it's called, that Dr. Adams just showed us this semester for the
Oh, that was cool.
fund. And I'll come down over here. It's kind of long. Take the enterprise value and divide it by the earnings before interest. Interest, taxes, depreciation, and amortization. And you want this whole number to be less than 11.5. That's about the market mean. And this is another value indicator.
What's the enterprise value calculated? Do you remember? Like EV, how the EV was calculated?
Enterprise value, actually don't remember that one.
Enterprise value is.
I don't remember either, but I know there's implications for that.
Do they have enterprise value?
FinViz doesn't have the enterprise.
Yeah, I don't
You have to
think-
go on
Yeah,
Yahoo.
it's okay, but anyhow, you can find the.
We'll go back to that in a second. We'll analyze the stock in a second.
Well, let's see the results. So you don't define the industry.
So yeah, what I don't define an industry. No. Well, I guess in a standpoint of an investor, you should find your niche for sure. You should specialize in electronics. You should specialize in one or the other. There is benefit to having diversity. I get that. You don't want just one industry crash, which is your industry, and then everyone else go up. But it's almost impossible to know all the industries, because the real way to find like really large gainers, especially in a retirement format and having it slowly build over year to year, is find small companies that are unheard of in the beginning. And that's really hard to do. But if you specialize in industry, like say lacrosse or something like that, like you might know like some new glove company that's coming out, or like some new material made for like shafts or something like that. So if you can specialize in one industry, it would definitely help you. And then get diversification using like blue chips of other industries. So we have three. Well, these are the rules that we like to use. There's obviously, you can see on here, there's said, I don't even know, like 40, 30, how many ones that? There's a lot of different ones. So you could sit here and you could go over each one and you go, exchange is that, PB is that, dividend yield. Dividend yield's fun too to mess around with. You can get gains off dividends, buying in right at the time, getting dividends and hopping off. Dividends are pretty cool, but you have to make sure the company is paying dividends.
So many, you've set up how many stocks are going to be just.
Rancid. So we have three here. We have only.
When you do this many, you screen this many different indicators, it dwindles it down a lot.
Yeah, a lot.
It seems to be such a low.
Yeah, I think I messed up here somewhere. Hold on. Payout ratio. Did I get that right? Under 50.
50 stocks to look at them.
Yeah, no, I agree.
And that's we'll get to that in a second.
PM. Where's
We
PM?
just wanted to show this because when you have,
My peg.
it's to show
Under 1.
You need 1.25.
Yeah, but you can't do 0.25. You can't do that on here. So under 1.
Good one.
Where's PM? Where'd that go?
The what?
PM.
Lower than growth.
Profit margin?
Net profit margin here. What do we want PM to be? 2.
You want to
Greater than 2.
invest, you need a really cool website.
Can we do greater than?
5%, we'll say.
Yeah. It's not helping us. What else did I mess up on? ROE 15.5. ROE over 15. Yep, that's right. And I don't know. Yeah, so yeah, we got a really small. Usually it's not the small. I don't know. I feel like I messed up on something on here.
Well, it's usually very small. When you do this many different.
When you do that many, yeah, I guess that's true.
Usually you don't use all the rules.
Yeah, exactly.
That's what we wanted to show you.
Yeah.
Use the rules, it's just to show that stocks aren't perfect. You're not going to find everything you want. Different investors are going to look for different things. Some want maybe a high PE ratio because they believe that company's going to be a growth company.
Yeah.
So they'll go high PE ratio. Some will just look for simple different indicators.
So okay, so here is a way to screen for stocks. Every investor should have a criteria like this. Like we were talking about loses and gains and stuff like that. You should also have in here when a stock hits, say 15, 20% gain, you get out. Because yes, it could just keep going up, but it could fall tomorrow. And the same thing for loss. I experienced this in my investment class, is let go of your losses. That's a huge bias when you think, because I bought into it, it will come back, it will come back, it will come back. Sometimes it doesn't come back. And if it does come back, it still comes on up below what you originally bought it for. So try to get out of that as soon as possible. So like 5% loss, you get out of there. So we hop over to Yahoo Finance. Actually,
So what you do after
screen
you
viz.
stocks, so what you do, and then how you allocate your fund, what percentage you put into the stock.
So that's diversification you're talking about.
You got 3 stocks, and then
That's
so
a
you will just choose invest in
Well, there's percentages you could do, or you could just do correlate. You could find correlation.
Do anything else beyond this, and then you just don't go to the website of the company and study the product and anything else?
See, it's funny. You're talking about doing a lot of extra work. I don't think that extra work pays off. I've done that extra work sometimes. I've read so for example, if we go to SanDisk, I think it's a really cool company. They have headlines right here, or where is it? Press releases. They talk about like all the news. Actually, I like Profile better, but yeah. So here you go. They talk about the news, and I find that by the time that news comes out, you've missed out on like whatever hype is to build. Yeah.
It's late already.
Yeah, exactly. So unless you're going off loss and you can short, you could find out if, say, a CEO is leaving and it's a huge deal, then you short the company and hope it drops. That's another cool thing about the stock market. I don't know how much you guys know about it, but it's basically legalized gambling that you can do 24 hours a day because there's a market somewhere in the world that's open all the time. I've actually kind of like looked into that theory because I find it's prevalent at like the really high end of it because say for example, like I know the highest earning hedge fund owner last year made like almost $3 billion in a year. What person needs that kind of money? So like, why wouldn't he retire? I found it's because he gets the thrill of losing like millions tomorrow or gaining millions the next day. It's love for like gambling in a sense. It's exciting and scary at the same time. But yeah, so moving on, another one to do. So like, let's go to basic. Actually, I want to go to FinViz. I like FinViz's charts.
So you guys can try his rules. However, if you use the same rule, you get the same result. That means you will be holding the same portfolio like they do. Yeah.
Yeah.
I mean,
And you don't want to boat off us.
Yeah, you can try and see which one works. And then
you gotta develop.
you can adjust the numbers. Don't have to be like TP less than 1.5. You can increase or decrease it. Yeah.
Not all companies are gonna have perfect numbers. It's just how it is.
Oh.
Actually,
So Finwiz.com.
What is Traveler's ticker? It's TRL.
You can also do your analysis here, right? For example, you have a company in your mind. You can
Yeah,
go
I'm
here
gonna
and
go.
look for the ratios of the company, right? At Finwiz.com. If
Oh,
you have
TRV.
for example, you're interested in Apple. Can you find the Apple's the ratios, everything here?
exactly.
Absolutely, yeah. So for example, I was going to go to Travelers. Dr. Adams loves insurance companies. They have a lot of cash flow. They have a lot of cash. What? Insurance companies.
Okay.
So for example, this is Travelers.
Okay, yeah.
I wanted to talk about analyzing the chart. So for example, like you said, you can go to this. You can see all of the ratios. It's kind of cool here where they have black is neutral, like nothing special, nothing scary. Green is good and red is bad. So as you can see here, there's a little red, more green, and a lot of just neutral, nothing special. But I'm more of a I like analyzing the chart for sure.
Analyze the chart.
So, for example, analyzing the chart, like you see how it actually, I've never actually seen it say that, but it says multiple tops here. Like a double top will show that the company can produce something or gain news in a way that it gets a spike to go up. That's a top. That's hitting the top of like, so here, where you can, if you guys, I don't know if you, yeah, you can see it. All right. You can see the blue line here, and I think that's a purple line. That's the channel. And you're always looking for a channel upwards. You're always looking for the channel to go upwards, unless you're shorting and you're looking for the opposite way. But so you're looking for the channel to go upwards, and then you're also analyzing how it hits its tops and bottoms. So here it's actually got a few tops, which is scary. I think this is going to drop.
So it's going to drop.
Yeah, so if I hopped on here in August and it just hits the bottom of the channel, that's where I'm ready to buy. Yeah, I'm ready to buy because as you saw here, it goes up and it's been staying up. It's actually really good with Travelers, but they're not channeling up too much. And because I like these charts so much, there's somewhere on here, the FinViz that you can do trending support, and these are all stocks that are trending upwards in their channels.
So the right one.
Yeah, the right one's going down. The right one's the
You should
opposite.
sell them.
Yeah, this one's going down also. But actually, the reason that might be is because it might be an ETF, a shorting ETF, because these are supposed to all be trending upwards. I thought I clicked that. Yeah, trending. Oh yeah, channel up. Yeah, here we go. And so then you have to do your own research on these companies. So like, I actually got really addicted to shorting, doing it the opposite way. And I actually didn't even look for the channeling down. I just looked for channeling up and bottom at the top of the channel.
Top of the channel.
Yeah, so like, yeah, like I would have hopped on right here on these guys and then rode that loss.
Yeah, but how, this is a
Does
question.
everybody know
really.
how to short?
Yeah, you know what I mean by shorting? Does anyone understand that? I'm sorry, I just like throwing these terms around. All right, so shorting is when you're betting. Like this is another cool thing. Also going back to gambling, you can gain at any point. So they have this thing called the big short. Was during the 2008. There was a guy who knew that was coming, and he shorted like all of his companies, and he made like loads of money when everyone was losing money. Shorting's complex. I don't know if you can explain it a little better, David, but it's about like when someone owns the stock, you then like borrow it.
You could somewhat borrow it.
Yeah, you like borrow.
If you want to short a company, what you do is you basically sell someone's share. Say we have Apple. We believe Apple stock is, say Apple stock is $50 for the AAPL.
AAP, yeah.
So its current stock price is $50. For whatever reason, we believe it's going to drop all the way down to $25. So what you do is you'll want to sell the when you short, you actually sell the stock for $50. So you'll be selling the $50. Say we have 100 stocks.
Wait, I hate to make this harder on you, but I'm trying to like, how do you explain the whole selling though? Because it's not yours to sell. You're like borrowing it. You're going to the broker who has it in his portfolio of someone else. So say you have Apple, and I'm borrowing it, yeah, and selling it.
But however, the problem is, well, since it's borrowed, there is a time limit. You have to give it back to that person.
Yeah. Well.
But since you sold it already, so you have to go to the market.
Yeah. So wait. So
You have to buy
that will be
it
explained in a second.
So you sell it to make $5,000 off of that. Once the market starts, or once Apple stock starts to go down, say it does hit the $25 price point that you believe it was going to hit, say it does actually make it to that point, you'll end up buying the stocks back for the 100 stocks back for $2,500. You'll make $2,500 in profit. Does anybody see where the risk lies?
Yeah. What's the risk? What's the risk?
If it doesn't go down, if it goes up, you gotta buy it at a higher price and you lose money.
There's infinite loss to be made. Yeah. It's
Say
very
Apple
risky.
reports their earnings and they're just much higher than anybody ever predicted. The stock rises to $150.
And you're up a
You've already
creek.
sold it for $5,000.
Yeah.
Now you have to buy back 100 shares for $15,000.
And you have to pay the guy that.
You ended up just losing $10,000 simply because the stock rose $100 whenever you thought it was going to drop 25.
So it's risky, but I found it actually pretty predictable compared to getting gains.
That the short sale allows, this kind of short sale allows you just to bet on the stock market without your own money.
Exactly.
Because you borrow the stock and you sell that, you got some proceeds on the
Something like
sales.
when Target had the issue with the credit card identities getting stolen, hacked into, whatever.
That's bad news. Yeah.
That would have been a great time to short Target's shares. Could have shorted them, sold them, bought them back at a lower price, and say once their stock price stabilized and it began to rise, you could have bought long within Target and grow the profits with that also. So you can play it so many different ways.
Yeah. So you want to do intrinsic value maybe next? Or do you have something else to talk about short? I mean, we talked about shorting. We talked about, you guys already know about the different ways of trading, like we had on the test actually.
What different way of trading?
Well, with what was it? It was like the stoppers and whatever. Why am I blanking on this?
Stop loss.
Stop loss, yeah. We talked about that already. That's basically kind of the only other ways of it. Oh, actually, David was really good at this. What about, you want to talk about futures?
Yeah, want to do intrinsic value?
Oh, yeah, we can do intrinsic value. So do you have the formula? Or are you going to write the formula? I'll pull up we can do like SanDisk as the intrinsic value.
Stay on this side because this
Here, wait. Actually, David, you can pull it over there. Actually, and it'll show what you've been writing.
Come.
Put it on the table.
Down here for a second.
So what else you guys are going to talk about?
So yeah, right now we're talking about intrinsic value. So going back to the where to go? The growth of the company. I think it was PEG actually we were talking about checking PEG basically, making sure that say if the company is growing and it's gaining, you need to check basically, which is intrinsic value, that the company is worth more than the book value.
Exactly.
Yeah, no, otherwise, the market value. Not
Alright, so say you find say you find a stock, say it's, I don't know, Nike, NK,
Oh, I'm gonna do Sandoz, SNBK.
oh, sorry, whatever you have up there. You can actually do one with them.
So if you wanna write out the formula for what you're putting, the numbers you're putting in, and then,
Was it 85.63 right now?
yeah, 85. So that's market value, currently it's 85.
What's this one?
SanDisk, it's I really like it, I just started looking into it because all GoPros and some phones take these tiny microchips, and I really think it's like a product that's really innovative.
Well, and all the cameras use the same thing.
Same thing, yeah, and it's really, everyone loves, SanDisk is kind of the dominant brand, there's other brands that make them, but SanDisk is definitely innovative in it. And they just released, and the reason I'm looking at it currently is they just released a new GoPro that's pushing 4K, so SanDisk is specially releasing a new memory chip to be able to do that with it, so I'm trying to vote off that news. But yeah, so continuing, so we have market value, which is $85.63.
So that's what people are willing to pay right now, based off the information they have. Maybe, here's some popularity with the, stock, whatnot. But the intrinsic value would be what that company is actually worth if you knew everything about the company itself, if you had all the accounting numbers. Obviously, we're not granted that kind of information.
Yeah.
So there's many ways to find intrinsic value. One we'll show you. Take the square root of the book value, which is also the market price, so the $85.
This is created by
63
Adams, or
cents.
this is from the textbook?
This is from the textbook, intrinsic value. I don't like Adams create, Adams didn't create.
You have earnings per share?
What? Oh, earnings per share, yeah, earnings per share is.
Let's go to the summary.
From last year, is 1.7, or no, 4.34, wow, that jump was crazy.
So you have the earnings per share for 1 year, said 4.34.
Yeah,
Divided by-
4.34.
Then you multiply that times 20.
So another
Can
calculator.
you read the equation
So,
again?
It's
Value
book
square.
value, which is the market price,
Uh-huh.
times earnings per share.
So right here, so
You
you
don't
go
usually
like
use
their-
the previous year,
yeah,
and you
go to their
multiply that by
revenue
20.
sheet, for example, like that.
Take the square root of that whole
Yeah.
equation.
Look at that, so.
So you use, the book value, you use the market price?
Yes.
Okay.
Whoa. Is this you, David?
No.
So how much is this earnings per share?
Wait, hold on.
Oh, this is mine.
Yeah,
Oh,
I think I know.
No, it's another one.
Put market value there, sorry. Book value would be different.
The market value.
So
Yeah.
what was it?
Sorry, I misspoke.
It was 83 something, 83.
85.63.
63. Yeah, so I'm gonna get the equals going on.
You need square root too.
There's
8621.
Was it 86.21? Alright, so the intrinsic value of this stock is $86.21. If you believe firmly in this number, that that's what that company is worth per share, then you probably would not want to
Yeah,
buy
you
this
wouldn't
stock.
buy- you
It's
wouldn't buy this stock.
almost capped out. It could possibly turn in a second.
$86.21.
Yeah, let's try another one. Let's do another one, dude. Is there, like, I'll do travel, because I'll show you another example of that.
So yeah, so the price is 94.
Go to Yahoo real fast. Yeah, track travelers on Yahoo.
So you cannot find intrinsic value on the internet
So
of the company?
you can find the earnings per share on Yahoo right here.
Right here.
Take the current stock price for Travelers, 94.56.
No, but I thought you needed the past earnings per share. Is that the current earnings per share? I always thought he told us to take the year before,
That's
the year after. I thought that earnings per share was always being recalculated, but maybe not. Yeah. Okay, so yeah, use it. Use that. There you go.
That 94.56.
What's that number say?
9.91
So times 9.91.
times 20 square root. This one should be way on the front, or way, yeah, way on the front.
It is.
136.90.
Yeah, so for example, this company is worth $136, while now it's priced at 94. We're definitely buying this one up for it. Like, I think we're definitely gonna buy this.
So if you firmly believe in this intrinsic value, then that would obviously be, it's only selling for $94.56 right now. You'll want to buy it because in your mind, from what you've done, you think it's worth $136.90.
What do you say, Ron?
But the intrinsic value is the value a year later, or
That
it
would,
would be the next day?
intrinsic value is the value for the stock right
For the
now
stock right
if
now.
you knew everything about the company.
So you buy the stock because intrinsic value is higher, so you believe the price will go up tomorrow?
Exactly.
Tomorrow?
Or
anytime
over a
in the
long
future.
period of time.
Yeah,
Not
anytime
over
in the
long period,
future.
you're short-term investor.
Yeah.
Well, for us, we're short term, but really, everyone should be long term, because
But you do this
Short-term.
calculations, all this, you're long-term, you just want to cash out, right, for undervaluation of the stock.
under,
Or you're
for
long.
looking at intrinsic value, you're looking long term, for
You should
sure.
be long-term.
I mean, you can gain current,
Yeah.
in short term, but like long term, like when you're looking at $130, over time, they'll hit that. It's not like tomorrow they're gonna hit
So you
130.
should buy this and hold until it
Yeah,
reaches
hold on
that
to it,
price,
yeah.
yeah.
You could gain off short term. It's a sign that they're expecting to grow. So you're guaranteeing, or not guaranteeing, but it's more likely to have that upward trend. So despite if it goes up and down per day, you should be able to grab on that. What else should we talk about? Does anyone have any questions? You can doctor down to watch a few of the Yahoo videos or
What
see
do
the
you do, futures?
Oh, dude, you're a master at futures. David won our class because of futures, purely because of
You
futures.
should put it on your collars and move on.
Oh, it's coming. It's coming.
When's it coming?
It was about to,
We're over here, buddy. It gets lost on the left. I don't know why. All right. Well, whatever. It will catch up one day.
So one way to make a lot of money or lose a lot of money very quickly is to invest in futures contracts. So this is for commodities.
Do commodity?
Commodity, futures. We're talking futures now, so it's not, we're not talking about stock anymore.
So basically, you're going to be betting on, say, we'll take the price. Let's see, I did coffee last semester.
Yeah, coffee made you a lot of money. Oh, look, coffee's still doing good.
So you'll be buying, whenever you buy a futures contract, there will be I wish we could show you what a transaction
Looks like.
This is
Oh,
more riskier than the stock market.
Oh, yeah. Oh, yeah.
More riskier.
Yes, and you'll be.
This is something you'd want to look at per hour. Like, yeah, this is not something, this is not a long-term strategy at all, at all.
Short term, if you will. When you buy a futures contract, you are locking in a price at which you will buy, say, I don't know how they're selling coffee, but say it says contracts at 37,500 pounds. So say I buy a price right now is $219.30. Say on November. Nope, went back. I would buy a futures contract today, betting for saying that I'll purchase the coffee for a certain amount of money today, or in the future, but that.
So I would say,
it's down.
so for example, right now it's at 219. I would say I'm gonna buy futures at 118. Noticing this channel, maybe even 160. I don't think it dropped that. So 190. I would say buy it at 190, and then once it finally hits that, you're gonna buy it. You're gonna be in that future.
So I'm purchasing, today is what, 10/13? Today I will agree upon a price to buy 1 unit of coffee, which is 37,500 pounds, I said, at 220 dollars. So this is the price that I'm betting it will be in the future. I think it will go up. I want to buy this. So I don't know how to explain it.
It's still the same as the stock market. You want it to go up, but it's
So
extremely.
what you're doing is you're buying it now at 220, and you're hoping that when it gets to that time, you can sell it for more, and that way you can pay that 220 and have money left over.
Exactly.
Yep.
So thank you. That's it. Have it in mind.
But however, you don't
For
pay
what?
anything. When you sign the contract, you don't pay anything, you just have a margin account. You
Exactly.
just have a margin account, and then at the settlement date of the future contract, and you just pay the difference.
Yep.
Difference of the price you set at the beginning and the market price when it's at the settlement date.
Now, despite like the technicality of this, I really love futures because it actually represents industry. So like these stocks we're talking about, despite if the company does great that year, the stock might be down for no odd reason. Coffee actually is dependent on like the revenues being generated in coffee. So, for example, I don't know, any of you guys watch Silicon Valley? No. Well, well, if you notice, the guy with the really creepy investor was all about. He was like staring at hamburgers, and he was staring at them, and they're like, "What is this deal?" He's really weird about it, and he noticed that there were sesame seeds on top of buns at Wendy's and McDonald's and all that stuff. So, and then he looked up, like he was really strategic about it. And he started looking up like where they grow sesame seeds and when do they have locust like blooms, and one of those specific areas is going to be hurt by sesame seeds. And so he was able to like buy sesame seeds, knowing that they're going to become extremely valuable and the price were going to skyrocket because the locusts were going to eat like 75% of the production of sesame seeds. So if you can analyze markets like that and like based off weather or governmental change that will change trading or something like that, then you can really bank off futures. If you can think like that, you can make a lot of money in futures.
I believe it was Southwest who bought futures contracts in crude oil, I think.
Was it?
And they actually did very well because they bought the futures contracts whenever we were on a lower price. Price of oil went up, they made out. So that's one example.
So how do you buy into futures? Like if you're gonna do it personally?
You, the futures.
Can you go to
The
your
futures
broker
are
and do that?
exchanged in the Chicago board
And weren't you required to buy like
options
so
and
much
futures,
for it?
CBOE,
Wasn't that
over there.
futures?
So, but however, you have brokers,
You
or
have
you
to
can
buy
buy
like
online.
one stock was worth
If you
like
have an account like
100,000 or something.
Mini-trade.
Unit.
TD Ameritrade, all these, you can actually trade these.
Okay.
But however, bear in mind, it's very risky. Remember, there's a lot of several movies about Wall Street story, Wall Street stories in the past, like a famous actor. And he's actually a future trader. Yeah, because you have a margin account, and however, you have to at the date of the deal, you have to close your contract, and otherwise you go bankrupt. And if you bet the wrong direction, you lose all your money. So it's very risky.
It's really risky. Like they
Yeah.
would like all the guys that are doing features in our investment class would show up and like, oh, I just made like they would jump in ranking. Like I just made 100,000 over like the night, and then like by the end of the class they'd be like, oh,
By the end of the
yeah,
class.
I just lost like all of it. Yeah, you have to watch it. You have to watch it like really strategically.
Yeah, because
Um,
stocks.
You do it for like what? You guys did it for like an hour. You'd
Futures,
hop on
like you
for
lose
an hour.
all.
Yes, and
Because
then
you
one
bet
more.
wrong, you lose all. Just like options, the derivatives kind of. You're actually betting at the directions of the price will go. So either 100% loss or you make tons of money.
Mhm.
Because you put no money down.
Exactly.
Yeah. The
There's,
stock, at least you're buying the future of the company. The company is still there. The company won't go anywhere. So derivative is more it's riskier.
Mhm.
exactly.
Yeah. But however, it's a tool to get rich quick.
Mhm.
So you can go,
But you guys know how they say the rich they get richer? That's because they have buy-ins that are a lot bigger, like private equity and stuff like that. And like for example, like IPOs, like you always wonder, it's like once you hit like I'd say like $2-3 million that you're willing to invest, you can then just like skyrocket. We're gonna, yeah, just come back. Yeah, that was scary when it dropped.
Yeah, usually the big gamblers like futures and derivatives, big gamblers are the hedge funds because they're
Yes.
not under any regulations in the market at all, so they can do anything they want. The big investment banks
Yeah.
are not, they have less and less like capabilities to trade now. 'Cause
This is
there's a
really
lot
cool
of
to check
regulation.
out. It shows how the entire industry is doing, or entire market.
How you get to this?
This is FinViz again.
Yeah, so
You
where
go from home, you go to Maps. It's right here. I think
or you
we
can
click
just click
on
on
that.
that.
So like you can scroll over things like, what is this? There's no million value. Come on. No, not want to zoom up on it. Well, doesn't matter. Usually it pops up their name. Oh, over in the right. That's
So
a
what's
petroleum company. Okay,
What's this
so
what's is for?
FinViz. This is
I know,
FinViz.
what's this one?
Oh, so this is cool just to show you, like, I always check this out in the beginning of the day just to see how, and the end of the day, how everything is. Because, like, some days it's all green, and some days we call it a bloodbath
So
when it's
green
all
is
red.
better. So green is better.
Yeah, green is good.
Black is
Dark green
good.
is great. Like, if you look down here, like 1.5, 3% gains in a day, 1.5, 3% negative 3% loss. So, like, what is this? This is a drug manufacturing company, Merck and Co. They're doing horrible. But, like, so... Like you wouldn't be interested in these companies because I guess this is also going to correlation and diversification. But like if you notice, almost everyone today is in the green. Almost everyone. But there are some like this industry right here, basic materials, is doing horrible. This is really dark.
So what you do when you see the chart like that? What you do?
So
if you have some companies.
you better hope you have
that go-
diversification on a chart like this because this is almost like this majority. I'd probably say 6% green.
I
But
thought to invest in stock, you shouldn't just be watching the stock market so closely, like daily.
No.
okay, well you're saying short term you have to be watching
Short
this.
term, yeah.
But long term, yeah, you do not. This would make you lose sleep. Like you don't want to
Yeah.
know. Like you get your portfolio, you invest it all, and then at the end of the year you have your meeting and you're like, oh damn, I only made like 1% or I lost
Yeah,
1%.
but they don't do that on a daily basis.
No.
Yeah.
Because
Day
this
trading.
analyzing it like this much is when
Yeah.
you start encountering high frequency a lot. Because
Yeah.
you start seeing things jump for no reason, and you're like, what's going on? Like there's
Yeah.
there's no rhyme or reason behind it, despite of how much you analyze it.
Yeah, because stock market is just like, for example, all of us, like some of us will bet the price will go up, some of us will bet price will go down, and then stock market is like aggregation of everybody, for any reasons they want to invest in the stock market for the stock. So it's aggregation. So we don't know there's
I
no
wanna see how it would
one
divide
force to drive the stock price. So because it's so messy, so it's very hard to predict.
Oh my god.
Yeah. But Hunter, FinWiz is a really cool website for you just to start to find. This is a really cool website. Like the rule they set up over here can help you just to pick the stocks.
Give them
Look at that.
Pick the stocks. Definitely in the long run.
This is another
you're
reason
making money.
you should analyze it per day because I read about this stock, Canavest, and this is when
Which one?
Canavest, it's a cannabis company, and this is
Okay.
when the whole hype of 2 states becoming
How
legalized.
much is it?
And if you
$2?
notice, wait, hold on, if you notice from here,
I know.
like from down here all the way up to here, you gain, I want to say 130%. In the course of 2 months, I was on this train right when it hit exactly here. I showed up to class, and I was recommending everyone. I was like, dude, I made like 25% in like 3 nights. This is great. Like
And then you sold
I
it?
made so much. I made like 30,000 off this company, and no, not everyone, but 2 or 3 guys bought into it, and it just started plummeting during the class too. And I don't think one of those kids like still forgives me today for like hurting his portfolio
Real
like that.
money, it's
But look,
not-
because now it's sitting at like $2. It
That's-
used to be at like 140.
That's really the problem. If you follow the other people's advice, usually you're so late.
Mm.
Yeah, you think like he's making money and you can, but usually it's too late.
When Phil's talking about a company that's doing poorly, it's a good time to look into it to buy,
Yeah.
Yeah.
because it might be ready to
That was
take
another
off.
example. I had Boeing, and I just kept riding it. I was like, it's gonna go up, it's gonna go up. It's a great company. I bought it right when they had
Correction.
they had a Boeing
Oh.
sales in like Dubai when all like the rich sheiks were like buying their jets and stuff like that. And I was like, oh, this is great. Like Boeing's gonna be like skyrocketing up, and it just started falling and falling and falling. And I just kept complaining about it every time I went to class. I was like, oh, Boeing's killing me. And David over here bought it and
Bought
made
it.
lots of money off of it.
Really, you shouldn't follow shouldn't follow the majority.
No, you don't.
Yeah.
Well, that's really exciting. Fission is getting closer.
So that's fun.
sure,
If it's
get
fun,
a-
like you can do the same thing like they're doing. Start from the few widths and then use the rules. Maybe not all of them. Use
Alright, so
like
now,
a few of them.
Another thing too to check out is this is a list of websites. Our teacher is always challenging us to find really cool, new, innovative websites because a lot of this stuff is boring and basic from website to website, but then you get really cool ones that like analyze in different ways. For example,
There's another one you
we
didn't
had
mention.
one.
There's the analyst ranking. Do you
yeah.
feel it's useful?
Yeah, I think-
Cause
I
like
think we're about to show you that
yeah,
one right here.
Dex.com or
Alpha
Yahoo.com.
Mathematics is a really good one. Like
Which
this one,
one?
for example, Alpha Omega Mathematics right here.
Okay.
The AOM ranking system is pretty highly regarded. Like, and it will show you rather than going to numbers. So like, let's see, what should we put in there?
Just go to.
What's oh yeah, there you
Yeah,
go.
so what analysts rank you is like the analysts will recommend the
Yeah,
stocks to
You
you.
wanna
They
go
say
back?
you have a top 10, you should buy, and top 10 you should sell. They
So
give you-
okay, so for example, like their review on Microsoft, let's say, really good, really good. Let's see, they say strong buy, 97%. Wow, that's crazy. I've never seen that before. Strong buy, strong buy, strong buy. They
Yeah. So you see strong buy.
And it breaks it down by
analysts.
value, growth, quality, and momentum. Momentum, I think, is huge personally. But
Then you can go and read about how they do all their calculations, what the 90%
But
means.
have
They
you
tell
tried
you how they
to-
figure that out.
Have you tried to buy the stock highly or strongly recommended from them? Are you making money by doing?
I haven't.
by
Actually,
following?
Microsoft is one that I'm doing right now.
really,
Yeah.
So I'm analyzing
Probably
it.
because like it's on a downturn.
Exactly.
It's a downturn.
So,
yeah, there you
You're
go.
all
He's
learning.
learning something.
exactly.
Well,
He's paying attention.
I'm always, it's really
Yeah, this company's good. There's another one that we really liked that for some reason the company ripped it down, but it showed by month of success. So I think the best one he found was Exxon. Never had a bad month, or never had. They had the best months or something like that. Like it would basically take. So say Exxon's been traded for how long is that? Probably like 30 years, 40 years. 40 years. Over the 40 years, September has always been a loss for them. So they'll do September as like a red month or October as a green month. And you can go off like past events if they're successful or unsuccessful. I thought that was really cool just looking at it in a different way.
That'd be somewhat of a technical
Mm-hmm.
indicator. Let me think.
I was going to show you guys. You have any questions?
Does everybody know when you make profits in the
Not
stock
until you
market?
sell.
So how?
You make profits when you buy. If you buy high, you're SOL. You're never going to sell for a higher price. You'll lose money. You always want to buy the lowest possible price you believe a company is trading for. You can buy it and write out the price. Obviously, if you're going long, if you're having a long position. So profits are made when you buy, which is contradictory to a lot of people think. What else?
That's true.
There's a few other things I was thinking of.
So when in your investment class, what's the percentage you make in the 3 months period?
Well, here's the deal. This semester,
Yeah.
we're purely analyzing. We might start trading.
No, 420. You had 420 class, right?
Yeah, she's talking about Ford.
Yeah, your own
Oh,
portfolio.
yeah.
So how
The
you
percentage? Who made the best percentage?
What about you?
What
Phil?
was- Oh, I got, okay, so
Okay.
I think I got
Can
around.
you share with us like what's going on in your portfolio?
Yeah, okay, my portfolio, I wish I still had that portfolio. I had anywhere, I made a lot of money in drones, drone technology, so General Dynamics made me a ton of money. I like them also because governments dump a lot of money into them, so they're just like.
But
batteries,
overall, your return is.
But yeah, so my return, I want to say I hit around what percent did you get?
I made 24.
Yeah, so
In 3 months, it's
I was at like 19 or 18, and I
That's
knew I
super
had to
good,
jump
yeah.
up to get them,
Yeah.
and so I dumped all of my money into like 3 stocks right at the end, and just it buried me deep. So I ended up not much, like 12%, but I tried my best. Once I knew I wasn't gonna win.
I was trying to see if we could get back into our accounts, but they
Yeah,
took it off. Yeah,
stocktribe.com.
they took it off.
Yeah.
I don't like how you can't trade pennies on there. I'd be interested to mess around with
The
the penny
penny
industry,
stock,
yeah,
yeah.
penny stocks.
But they got how much? 250,000, right? Or
500,000.
500,000, yeah,
yeah.
yeah.
You invested 5.
And in the course of 3 months, making 18% is amazing. Like amazing. Like when you get like a Fidelity retirement
Yeah.
plan or something like that, you're hoping for like 12 to 15,
Yeah.
and the whole year. In the
Yeah.
whole year.
So you got 3 months, basically in a whole year
Year,
period,
yeah.
you can times 4, so almost double
Yeah.
your
I just thought
investment.
of another thing.
What?
Kind of related to that whole profits are made whenever you buy. If you see a stock is trending down,
Yeah.
say there was a market correction and the stock has been trending down for the past few days or past few weeks, you do, I mean, it's my personal advice, you don't not want to try and buy it whenever it's still on a downward trend, on a downward cycle. It's called catching the falling knife. That's what you don't want to do because you'll end up bleeding, you end up losing more money. You want to wait for it to stabilize and show signs of recovery before you buy. And once you buy, go long and you can make money that way.
In that stock market, once you see the opportunity, you should quickly grab it, or you should just watch, keep on watching.
2 different scenarios you're talking about. There's
Yeah.
sometimes that you want to grab it, and sometimes you don't want to grab it. Like he was just explaining, that's one of the scenarios you don't want to grab it, and
Exactly, you want to sit back and watch.
then you want to watch it. Yeah.
If there's a scenario where bad news comes, say with Target, and they're starting to lose money, you want to short them, I'd say hop into it right away, because with shorting, you
That
need
makes
to
sense, yeah.
execute it very quickly, get in before they start stabilizing again, so.
Yeah. So now I think what I've learned to spread, I guess in a sense, to educate you guys after the experience we had. If I knew what I knew now going to that class, I would have probably buried around 60% of my money into ETFs in
Yeah.
the market. And
So
then
you leave it there,
and then
right?
I would have specialized in maybe I like technology. I'm pretty good at technology.
Yeah.
But Dr. Adams, he has a good point. Insurance, and I've known a lot of financial employees talk about insurance. They really like insurance.
I think he doesn't want you guys just to buy ETF, because that's too easy.
No, it's too easy. That's doing our
That's-
job for you. But
that's-
ETFs are
yeah.
basically a portfolio already made for you. So you're buying one stock that then carries like 100 more stocks that those accumulated give you a percentage of gains. The only reason I say that is just because now that I've learned that it's hard to make portfolios and
Yeah.
it's a lot of work, I would have dumped a lot of my money into ETFs that someone else was doing that work, and then I would have specialized in a few stocks
That makes sense, yeah.
or the industry, just because.
You just
Found
put
it.
aside some of the money to gamble, and then
Mhm.
to leave the rest in
Exactly.
the very safe pot.
That we definitely saw that as we definitely saw that biasm of the whole mental accounting. We definitely saw that, like when people gain money, they'd be like, okay, let me try something really risky,
Yeah.
and then they just lose it, and it's like, well, that was your earned money. You should Netflix. Half of our class would do this, like we just sit in class and Dr. Adams is like, throw tickers out, and we just look at stocks.
Another example of how you say if you want to kind of.
What's this company?
Is
This is
Netflix.
Netflix. You can see
Okay.
they have an outrageously high PE ratio, forward PE. Pretty much everything.
You think the price was still?
Crazy.
You think the price is still
Because they're
going?
all online.
What's that?
Because Netflix is digital, they don't have much equity.
Oh,
Their assets.
Yeah.
Their assets is their relationships with Hollywood companies to be able to gain early access to movies and stuff like that. And they have assets. They have great shows that are winning awards now. So they definitely have like
But
studios.
it says like Hulu and other stuff have their own shows too. So it's not really like, they're not like monopolizing that very much.
No, I'm not saying they're monopolizing it. I just think
But it's like Netflix is like always behind like seasonal TV shows and stuff. They don't get the stuff
the
like.
new stuff. Yeah. No, but they do get some stuff. Think like, I mean, they have tons of stuff. So they have relationships and contracts built with like millions of movies. Maybe they're not massive movies. Maybe they're not like big name ones, but they're definitely I think I would consider them to have. But maybe that is why their P is ridiculously high.
I was just gonna make an example real quick. How Dr. Foley said, whether you should kinda invest on, instinct real quickly or kinda wait and see what happens.
You don't search for news yearly to invest in the stock market. You should first you should do, you should search for what's the recent news, right, and
Exactly.
try to get something before others get.
But there was an instance where one of our classmates last semester bought, or actually, you can see where Netflix made a jump. I think they reported it in the news,
Yeah.
I believe.
Who is the student? You?
It remained nameless. No, it wasn't me. It wasn't you either, so.
I don't know.
But anyway, price jumped. He decided Netflix wasn't worth the
Was it down to?
380, I think, if I'm following that line right. And he shorted them immediately. So you can see Netflix kept on rising and rising. He ended up
Last
making
time.
lots of, or
Lots of
losing
money.
lots of money. And I think this is the same stock he bought whenever it hit around its peak, and he ended up riding it down. So that's
They'll
another.
get ya.
Exactly.
Stock market
Kinda
will get
wanna
ya.
get a feel for how everything works. You don't wanna just go willy-nilly and end up losing all your money.
Yeah,
So,
everyone wants to buy low and sell high, and they always end up buying high and selling low.
exactly.
Almost everybody's doing that.
But if everyone traded rationally, there'd be no gains to be made. You need those irrational people.
There'd be no losses either though.
Yeah, but
Exactly.
who cares about the losses? It's all about those gains.
But what about if it's your real money and you make
If
lots
it's your
of
real
losses?
money, you go to like Fidelity or something and have them
Right.
trade for you.
Yeah. So it's,
I
You
wouldn't
guys are
I would not
trading-
recommend anyone to be a day trader. Like, do not
but you
quit your
guys are
job.
trading the real money for Adams.
Yeah.
The school's
We
fund.
should be trading differently though. Like the more I learned about private equity, like the more I
Yeah.
realized that like we should be taking our money and dumping it in private equity.
But that
Like-
takes away the educational.
No, it does. But like when I was selling funds and stuff like that of private equity, we'd be going to like schools and we're like, can you drop like said a couple $1 million? And we're
Private
like,
equity, it's different. It's super rich people. They got,
yeah,
they got
but no,
lots
but we
of
go
money.
like I worked for a company who was a
Yeah.
third party marketer. We sold them and we go to schools, we go to institutions. So
Yeah.
like we could take our whole lump sum, and I could actually get us a really good deal on like a good like Cyprian's a good fund right now, and they're getting like 32% per year for 5 years. So that's way better, I think, than the stock market. And it's more guaranteed. Like we're doing like that's middle market mezzanine, so it's like a lot of buyouts and small companies. It's not dealing with large companies. The middle market and the lower market, I suppose, here where like a lot of trending stuff is happening. A lot of people like the middle market and the lower market.
So you just suggest everybody just give the money to the professionals just to handle, not yourself.
For day trading, yeah,
Yeah.
I would say that. I would say that was my best advice to anyone. If you're trying to use the stock market, actually, my best advice is stay away from the stock market and try to find other investments.
Well, the stock market's kind of useless. The money doesn't help the economy at all.
Yeah, exactly. So go invest in
It
like
helps the stock.
go invest in like real estate or
Money in the stock market doesn't help the economy.
go buy like Five Guys and let that be like your return.
You go buy a piece of land when it's cheap right now and wait till it's nice and
Exactly.
expensive. So
Exactly. The way to make a lot of money is you learn new channels and investments and how to gain returns. The whole goal, the book we read was the whole goal is have your assets pay you. So even if you lost your job per month, you still have a set amount of like maybe like renters. You get real estate and you have renters pay you per month. It's the way to do it.
Well, technically, when you have a place, you should always have like 3 months worth in savings.
Dude, that's first. That's like
I
we
think
should do that
Adam-
now.
Number one. Yeah.
Adam didn't tell you guys the real secrets of his trading to you guys.
What's his real secret? He will know. I don't think he'll ever.
He probably
like-
doesn't the worship.
he probably
I think we.
All the finance guys I talk to are like very like Like the hedge fund owners that I know, they're like, they won't even like talk to you about that stuff.
Yeah.
I'm always like, yeah, I'm a finance major, blah, blah, blah. Like, I also need a job. They're just like,
Yeah, I heard what Adam was doing, but it's several years ago. Like he holds like only kept several stocks. One is Walmart, and then he just watched closely the trend of the Walmart, and then he always catches the bottom and then buy at the bottom, and then when it goes up, and he will sell. He will sell. He always just follow one stock, and then he always follow the trend of the stock.
mm-hmm.
And then cause they go down, cause it's always like a way they go down, and you know it's the bottom, and then you buy.
As I said, I think Walmart really moves on it.
You guys can try this strategy because it's easy, because you always follow one company, and like Walmart or Google is another good one. And then because the price is going up and down like a wave every day, so you try to catch a
The
bottom.
problem is that you
and
gotta
then-
watch out. You get fees too. You get broker fees.
I know, yeah, but however,
More trading.
yeah,
Also just do commodities.
I was told that's how he trades. That's how he trades. He doesn't do this stuff. He just watches several stocks closely. Roger, you should have some experience in the stock market.
I,
So you have something you're still holding.
I-
Losing values, you're still holding the stock.
Unlike you who sold it for a loss, I still have it. It will go back up, no. I do the mutual funds.
Yeah.
I just put money in there, I put the same amount every month, just let it keep going in
Yeah.
there. And it's in the high risk, high gains right now, so I get closer to retirement, I'll start moving it out into the money
Yeah.
markets. I don't even look at it, cause if I had, I'd probably kill myself with everybody else when the market crashed a couple years ago,
Yeah.
but I don't even know how much money I didn't lose because I don't know how much I had.
That's a good thing. That's a very good thing. No. It is. Not people would be
I'm
sleep
going to
over
give
it.
you guys a paper to read, and one person who predict the financial crisis say like the stock market is going to go down by 10% and plus. So
So you knew about it.
I'm going to give you the paper to read.
Oh, I forgot to talk about beta.
Which one?
Ooh, beta.
Oh yeah.
Beta's
Whoops.
important.
Yeah,
So
so.
you don't have a requirement for beta, right?
Yeah, we should throw
Take,
that.
take Dr. Kohler's other class, she'll teach all about it.
Yeah.
I'll give you a math equation equals to covariance of the individual stock and the market over the.
Yeah, and if you need to know how to work that equation, see that man right there?
If you want to, yeah, if you want to work.
He's almost as quick as I can put it into,
Computer, Excel.
in Excel, he can figure it on his calculator.
Like 6 on
What time is it?
it. 145.
146.
1:46. Well, it's about time. Any questions? Well, it's really very good lecture, and we have learned a lot from them. However, the conclusion was so good. They just try to tell us to
Stay away.
Stay
from
away.
stock.
That was just,
That's not right. You should. You got burned a couple times at the beginning, but you should be better.
I don't know. I'm just saying there's better alternative investments that will gain you larger returns. So if we're talking about investing, the
Yeah.
market's not where you want to be at. It's not. It's not. Or you go, like I said, you go to the high frequency. You go to
Yeah.
like Fidelity and you say, lead trade for me. Because they're rigging the market with their high frequency ability. Rigging it.
And they're being able to do get the better prices because they're
Yeah.
more electronically.
Yeah.
They're right down the road from the market.
And then they got more professionals to
Measure
study
more
the
stuff.
company and then do
Market
the math and everything.
No, I'm just reading it.
forgot to show the guru.
Oh,
This
yeah.
guy. Oh, well.
Well, thank you guys. Thank you guys. Roger, if you want me to.
Hey, so can I
upload
get
it
a copy
into
of the
the-
list of websites?
Oh, where's that thing?
Can you give me a copy of your website?